We'll go ahead and get started here to stay on time. We have a short amount of time and a lot to cover and hopefully time for your questions as well. I'm Sue Schweifley with the UMass Extension Vegetable Program. Lisa McCabe from our team is here as well, helping with logistics and stuff. We're recording this webinar, so just be aware of that. We have about 30 people on so far and 60 registered. This is a webinar, so we have a Q&A box, and if you type your questions into the Q&A box, the presenters can respond to them kind of in the background. So that's the best place for questions, and if you have any technical issues or other comments, maybe that's what we can use the chat for. Other tools on your Zoom toolbar are the poll, which if you click the poll button, there's just 2 questions to help the presenters get a sense of where people are at as far as their crop insurance and what kinds of things get in the way of getting insurance. So we're excited to host this webinar today. We've been getting a lot of questions from folks after last year. You know, would crop insurance have helped me with the flooding and rain? And what are the options? So we have Bailey Albert from Farm Service Agency and Alex Sereno, who is our Northeast Region coordinator for Risk Management Agency. So we'll go ahead and let Bailey get started.
Thank you. Thanks, Sue and Lisa, for arranging this, and looking forward to doing the 101 version today and diving a little bit deeper with you all on Thursday's webinar. So this is intended to be a high-level overview, just give you the major talking points about the NAP crop insurance program that the USDA Farm Service Agency has to offer. Like Sue said, my name is Bailey Albert. I am the outreach coordinator for the Massachusetts Farm Service Agency. But being a federal agency, everything that I talk about should be relevant to you in any state that you're located in. So this is, you know, a universal presentation. Today, briefly, I'm just going to touch on what is USDA Farm Service Agency, if you're not familiar with it. I'm going to talk about the crop insurance program that FSA has to offer. Our acronym is NAP for that. And the major takeaway that I'd like you all to come away from this 101 presentation with is that I want you to feel free to connect with your local ag service providers, USDA and beyond, because you do not have to be the experts in these programs. That's what we're here for. So if you learn about NAP and you feel like that's something that could fit your operation, connect with your local Farm Service Agency staff and they'll take you through the steps. USDA Farm Service Agency, or FSA, I try to limit the acronyms because I know it can feel like a little bit of alphabet soup when we're saying all these acronyms and different letters and words, but there's a lot of different things. So if I get caught up with an acronym, please drop in the chat, what is it? And I'm happy to clarify. So USDA Farm Service Agency, we're the one of 29 agencies under the USDA umbrella, and our role is to be responsible for administering the programs and policies that Congress puts out through the Farm Bill. So anything that Congress sends along basically to get directly to our farmers and ranchers throughout the country, FSA has some role in that. We're 2 halves of a whole. In a way, we have our farm program side, which are permanently established programs that come through the Farm Bill, and they happen every year. And we also have responsibility over ad hoc or emergency programming that comes along in response to unforeseen events like a global pandemic or, you know, the severe flooding that we saw up in the Northeast this year. And on this end, we also are responsible for doing the eligibility paperwork for your participation in certain USDA programming. I'll talk about that a little bit more in depth. but I want to highlight that there. And then our other half of our responsibilities is farm loans. We do offer low interest rate loans to those who qualify for purchasing a farm or for providing any of your operating costs, feed, seed, things like that. When I say for those who qualify, this is designed for people who are unable to secure credit from a commercial lender like a bank or a farm credit system. We are your lender of first opportunity. And then to get right down to the nitty gritty, the way that Farm Service Agency works and a few of our sister agencies work is that we service you on a county office basis. So your office is based on your county location. Like I said, this is relevant to all of the nation. You will have a county executive director and a farm loan manager at your disposal. We call them county offices or service centers interchangeably. Our service center idea is that in one location, you can interact with your farm service agency, your local natural resources conservation service, and your local rural development office. So I have hyperlinked here, and Sue may share these slides with you after. To find your local service center, you say what county you're in, and it will tell you where your office is located and who your local boots on the ground staff are. I alluded to the idea of eligibility, meaning that we just make sure that you're fitting the criteria that Congress put out to participate in our programs. FSA will give you a farm number to keep your records straight. We'll do your eligibility forms, which are pretty self-explanatory. They can feel a little bit intimidating, but like I said, connect with your office, with the human being. We'll walk you through what everything means. A lot of the forms are one and done. Some are required annually, and some are required if you have changes to your operation. And then acreage reporting is another piece that Farm Service Agency does. And this is an annual requirement where you report to us by July 15th what you've planted, how much of it you've planted, when you planted it. And we establish that for certain program rules and for the history of your growing situation. Oh, my. Okay, now I'm going to dive right into NAP, why you're all here today. For Farm Service Agency, our crop insurance offering is the Non-Insured Crop Disaster Assistance Program, aka NAP. That's one acronym that kind of does save us a mouthful of time. NAP is an insurance program for crops that aren't insured through federal commercial crop insurance, like my colleague Alex will talk a little bit about. So this means anything that's not the major commodity crops that you think of, corn and soybeans and tobacco. This is for your tomatoes and your pumpkins and your herbs and your flowers. In essence, it's an insurance program similar to an insurance program for two reasons. There is a service fee to obtain coverage, and we do cover you at various coverage levels. So when I say secure coverage, you apply your application for coverage, you get your coverage, and you pay $325 per crop, up to $825 total. So whether you have 3 crops or 30 crops that you want to cover under NAP, you will be capped at $825 for basic coverage. And I want to really emphasize the fact that this service fee is waived for any historically underserved farmer. For us, that means beginning farmers farming from 0 to 10 years in business, limited resource farmers, which is a category that's based on your income versus the national poverty level. There's a formula if that is relevant to you. We can walk through that. Socially disadvantaged is the term that's used in regulation that we realize not everyone resonates with, meaning women farmers or racial or ethnic minority farmers, and then veteran farmers. The reason that I started this is I just want to show you that it's just a one-page form. It's optional. It's self-certification. You check the box for which category you apply to, you sign it, and you have it on file in the office. And that means you automatically are enrolled in NAP for free. This also has benefits for some other programming, so it's worth doing. You can get a higher percentage of a payment in certain instances, other fees waived. And it's one and done for socially disadvantaged, beginning or veteran producers, and limited resource will have to submit annually. But once you get it on file, you have free NAP. So I really emphasize that fact to people. Fill that out, and then should something come along down the road, you automatically have this insurance. When I say NAP is available at various coverage levels, I mean that there's the basic coverage. We also call it catastrophic level coverage. And you'll see that it has a ratio, a number ratio here, 50-55. And buy up coverage options, you can get 50, 100, blah, blah, blah. What does that mean in plain English? What that means, the ratio is the percentage of the crop that NAP covers versus the percentage of the average market price that we would reimburse you for. So in plain English, for a basic catastrophic level coverage, 50% of your crop is covered by NAP. But what that means is it's the second 50%. So you have to lose over 50% of your crop before NAP kicks in. So say you lost 75% of your crop in the flood this year. NAP would cover 25% over that 50% threshold. And that 25% would be covered at 55% of the average market price. For buy-up coverage, that we offer higher levels of the percentage of your crop that's covered and at 100% of the going market price. To get buy-up coverage, there is a premium fee, and that's just based on the amount of acreage that you want to cover. And so it's different for every operation. For our historically underserved farmers who do identify on that form that I showed, we will cover 50% of that premium for you, and you're only responsible for the other 50%. NAP causes of loss. Eligible causes of loss for our program are only natural disaster or weather-related events. These include flooding, drought, hurricanes, hail, tornadoes, earthquakes, anything that is a natural situation. I like to mention notable ineligible causes of loss just to be transparent up front. Situations, certain pest situations, if the deer get into your field and eat all of your pumpkins, unfortunately, that's not really due to the weather, so we don't cover that. Market disruptions, if a pandemic comes along and you can't sell to your restaurants that you used to sell to, that's not a NAP program. And the last piece is, I write here, the failure to employ good management practices for the crop. What that means is we can't cover you going out into the field and throwing 100 seeds in the ground and saying they didn't grow. We need to have proof that, you know, you put some good management practices into this and then a natural event caused some losses. Because this is the 101 version, I'm doing a high level here, like I said, and I want to talk about the way that NAP losses are calculated. So your losses for this program are calculated on the following criteria. There's a formula that puts all of these things together and spits out your payment. So your payment would be based on the acreage amount of the crop that you planted, your approved yield, which we will come back to. But the idea is that we need to know what you could be expected to have yielded should there not have been that weather event. The net production of the crop that you actually got, how much of your crop were you able to harvest that year? 0, or did you get a couple bushels, etc. Your coverage level, like we talked about, and then what the average market price of the crop is. And that's on our end. But those are the factors that go into getting your NAP payment calculated. The other thing with NAP is that we use a loss adjuster who is a third-party contractor with Farm Service Agency that will be sent out to evaluate your crop after the loss event. So that's kind of like an insurance inspector that just goes out and sees what happened and how much was left in the field and looks at your records with you. The process of NAP,
Bailey, can I
Yeah,
interrupt you for 1 second?
absolutely.
I think there's still a little confusion about the 50-55. Could you give just like one more example or talk through that again?
Absolutely. So
And maybe go back to that slide just real quick.
oop, I got excited, went right past. Okay, so basic coverage. And so I always hate to put it out here because it is confusing. But the reason that I do is so you're aware upfront and you're going to see those numbers. So 50-55, again, that first 50 is the percentage of your crop that's covered by NAP. But it's a little bit backwards because the insurance doesn't kick in until you lose your first 50%. For buy up, just to hop forward, when it's 55 or 60 or 65, we're saying that NAP covers that other 45-35%. So you only have to lose that opposite half of the percentage threshold for it to kick in. So in other words, it's sorry, it's tricky even to myself. That's why I wanted to put it in plain English to just say out loud. So if you're 50-55 coverage, it's basic, you lose half your crop and then it kicks in. If you're doing buy up 55%, you only have to lose the 45% threshold for it to kick in because NAP would cover that other 55%. Is that getting to what the question was, Sue?
Yeah, so you could buy up to 100% say, but say in your example down below, if you bought buy up coverage for 75%, then you only, if you lose a quarter of your crop, then it kicks in. But you
Correct.
always get reimbursed at the 55% rate, right?
So you have exactly the right idea. Here you can see that the buy-up coverage levels go only to 65-100. So what that means is for the 65, you have to think of the 35% is what you have to cover yourself. NAP's only going to cover that 65%. So you have to lose first before NAP kicks in. So you lose the 35%, and then the other 65% that you have a loss on, we can cover. Buy up gives you the 100 on the second piece, and that's 100% of the market price. So whenever you buy up, you're getting 100% of the price. It's just at a different coverage amount ratio that's lost. Basic coverage is the only one that has the 55% of the market price.
That's very helpful. And there's one more question that I think could be a can of worms about the average market price. So I'll let you, I assume you're
Yes.
going to cover that later.
Yes, and
Okay.
if I don't get to it here, I will answer it in the Q&A.
Okay. All right. Thanks.
While Alex is going. Thank you for the questions. And I am happy to slow down with anyone and talk it through logically because it's a little bit backwards, but it's congressional regulation handbook language that we're trying to distill down and interpret here. So happy to go slower with anybody at any time.
Thank you.
So just quickly, the process for NAP, and I know that we are targeting more of a fruit and veg group here. So you probably are growing annually tilled crops. So the crop year for annually tilled crops for NAP starts on March 15th, coverage starts March 15th to the normal harvest date of the crop. And that's in our system. That's something that is just based on data of when we can expect that all of your crop would be harvested by. A lot of times it's, your whole season, and we just say the normal harvest date for X is October 31st. And so that's just means that's the period that you have the NAP coverage on for that whole time frame, any loss event that could happen during that space of time. So your coverage for the crop year must be obtained by March 15th of the calendar year. So for this year, if you were interested in getting crop insurance, NAP, on your annually tilled crops for 2024, you would have to secure that by March 15th. That either means you go into the office, and if you're not a historically underserved farmer, you fill out the application for coverage form on which you say which crops you want to cover, and you pay a service fee. or if you're historically underserved, you get in and you file that self-certification form and say, make sure you say what crops that you're going to be reporting on for the July 15th deadline. This is the acreage report that I was alluding to. So Farm Service Agency requires that you file an acreage report by July 15th of the crop year. So by July 15th of 2024, saying what you planted, how much. I planted hybrid tomatoes, 1/2 acre on June 30th, and that's recorded. This is in the system then, and we can prove that in August, if you had a flood event, that you did tell us you had planted that 1/2 acre of tomatoes. That's how we prove your intent and your purpose, and that goes into your NAP claim. When you have a loss with NAP, you are required to report it to the county office within 72 hours of the loss becoming apparent. So that's not to say, okay, it rained crazy, flooding. I have to call the office right now. We can wait till the flood goes down and you go and you see that, yes, your crop was wiped out, because that's when it became apparent to you. And then you have 3 days to call our office. When you do that, the county office is going to prepare you a document. It's called your notice of loss. We're saying we have recorded that you said that you had a loss here, and then this is the situation. You have to sign it and return it. I'm putting in these little bullet points of due within 15 days of the loss becoming apparent. The reason that I'm putting that here is so that you're aware that there are timeframes and certain deadlines and regulations to be aware of when you do the NAP process. I don't expect you to remember them, and the county office will, your local staff will remind you and say, I need this form back by X day. But I just want you to be aware that you are responsible for meeting the program deadlines. And then once that form is in, that's when the county office will reach out to the loss adjuster in order to arrange a time for them to visit your farm and just see what's going on, take some pictures, documentation, and talk to you about what happened and were you able to harvest anything before or after the event, etc. The loss adjuster is responsible for writing up the report. You don't have to do anything other than walk the loss adjuster through your field and answer any of their questions. Once the loss adjuster's report is done, provided the county office, we will calculate the payment and you will get yet another form. This is your application for payment form. So you have a form for coverage, you have a form for saying you had a loss, and then you have a form for applying for the final payment. Again, here's a deadline here that you must fill out your application for payment form by, but that is usually just you signing and certifying to, yes, I reported this, the loss adjuster saw this, and I'm saying it's okay, please calculate my payment. Throughout the process of NAP, you might be required to provide certain records to the county office in order to verify information regarding your loss. And these records can look like sales receipts or invoices. We do ask how much production you were able to get from your crop before the loss happened, if any. And the way you might verify that is, here is my 4 invoices that I was able to wholesale 100 pounds of cucumbers to the restaurant before the floods came. Field notes, really anything you jot down in a little notebook. I tell people, if you wrote a note on a napkin, give it to us, because that's contemporaneous real-time record keeping that we can go off to show what you were doing. And yep, hi Sue. 5 minutes, great. I thought you were waving at me. Apologies. And then copies of a lease. If you don't own your land, we just will ask that you have some sort of written record that shows you had control of the crops that were happening on that land, so that you are the one that has earned that payment. This is the last tricky thing that I'm going to talk about, and that's your approved yield. I said we would come back to that. So in the easiest explanation, we need to know that, hey, you planted 2 acres of tomatoes and you could be reasonably expected to have gotten X pounds of tomatoes out of that had everything gone right. So that approved yield, that yield that we're going off of to calculate the estimated expected crop is either based on a county average or it's based on your approved yield, which is your actual production history given to us for up to 10 years. So you are required to report, if you participate in NAP, your production from the previous year to the new year. What I mean by that is you go through the 23 season, and by the time that you're reporting the new crops that you're growing in 24, you also give us a record of how much you produced in the previous year. And that's just a listing of I grew tomatoes and cucumbers and peppers, and I had X pounds, X bushels of this. The reason that we do that is because this is to your benefit. If you're a really good grower, you have excellent yields, you are the best grower around of bell peppers, your approved yield is going to be higher. So we can say it's reasonably expected that you would have gotten a higher than county average yield based on your production history. And then your NAP payment is going to be, you had a loss, so you didn't get that amount. And it's going to be a higher payment for you because it's rewarding your good growing practices. That's something that is a little tricky. If somebody wants to drop a question in the chat about that, and I can explain a little bit more, I'm happy to. But I just want to end here with my last 2 minutes and say, a lot of this feels like a lot of record keeping and a lot of paperwork, and it can be really overwhelming. But I want to say that it's really imperative that you do the record keeping that the county office asks for, because that's going to be the best outcome for you for the program participation. You're going to get a higher NAP payment. You're going to get an easier process going through. Again, your actual production history is only to benefit you. If you're a good grower, get credit where credit is due. And sometimes if we don't have satisfactory records, your NAP payment might be reduced for that. And other benefits of record keeping, I'd just like to put a plug in, is that it helps in your business so many ways. It can help you remember what happened, what you planted, what your thought process was. Here I planted these kinds of seeds, and this field was these kind of seeds, and only this kind did well. Maybe next year you don't want to buy the ones that didn't do well. They're also useful for other agency programs, grant applications through the State Department of Ag or local nonprofits, so you can reuse your records for multiple purposes. And my last slide here is, to be fair, I want to recognize that NAP is designed to be a safety net program. It's not a profit replacer. As we talked about a little bit with the coverage levels, you're not going to be reimbursed 100% of your loss. The idea is that we're going to give you enough to hold on, stay in business, buy seed, try again next year. So the idea is mitigation and adaptation will help you more in the long run. With all these crazy droughts and then floods, we want to make sure that we're helping you figure out how to best prepare for this, not rely on crop insurance. We want it to be a safety net while we're helping you figure out how to get the best bang for your buck in what you do. So thank you for bearing with me there. I have my contact information here. Like Sue said, I'm happy to answer more questions and throw it over to my colleague, Alex, to talk about RMA. But on Thursday, another colleague of mine, Julie Jock, is going to be talking more in depth and probably answering a lot of questions that remain for you. But just wanted to give you that snapshot of, is NAP maybe the right program for you?
Thanks so much, Bailey. While we're switching over slides, I don't know. So while you were speaking, Bailey, I asked Julie, who, like you mentioned, is going to talk on Thursday, to go through and answer some of the questions that did come in about the FSA program. So since we're on time, I'll just encourage folks to keep using the Q&A box. If you have questions for Bailey and Julie from FSA, they can answer them there, and hopefully we'll have some time at the end, or you'll have an opportunity after the webinar to submit, feedback or other questions. And then on Thursday, the speakers can incorporate some of your questions into that presentation, and there will be a little bit more time for discussion and questions then. So keep on with the Q&A, and we'll hear from Alex Sereno from Risk Management about their two programs. And I'm these programs, I just want to say, are not static. They can be changed, I think every year based on feedback from you all, and they are designed specifically with small, diverse farms in mind, farms like we have in New England. So your feedback is really valuable to improve the programs and make them what you want them to be. So I'll stop talking and let Alex take it from there.
All right. Thank you, Sue. Can you hear me?
Yep, slides look good.
All right. So my name is Alex Sereno. I'm the director of the Risk Management Agency's Raleigh Regional Office. So we are the regional office that serves the 14 states from North Carolina to Maine. It's a big region. It includes New England. I want to thank Sue for Lisa for putting this together and giving us the opportunity to give a quick presentation. This is going to be sort of a 101 look at our whole farm and micro farm programs. Like Sue said, we're going to get into it in a little bit more detail on Thursday. Then I'll share some of the forms or templates of the forms to try to help you guys understand, I guess, where the rubber meets the road a little bit. But for this, I just want to give a high-level overview of the programs, sort of help you guys understand, what we're trying to accomplish. Feedback we get, we maybe aren't meeting the mark with these programs in your area, and we know that. And like Sue said, these are programs that we can change. We are open to feedback. We'd like them to be successful. And so with that, I'll start. Let's see. So just give a quick overview of risk management in the USDA. So one of the things that I think is an initially confusing point for a lot of growers is there's sort of two places you can go. So you've got the Farm Service Agency, which is what Bailey just presented about. That's got the NAP program that she covered. And there's other disaster programs that they have, like she sort of alluded to, on an ad hoc basis. That's going to be something you can get through your USDA service center. So you go to farmers.gov and you type in your address and you find the local service center, or probably you already have a relationship with them. We're a sister agency to Farm Service Agency. So we're the risk management agency. We administer the federal crop insurance program. We're a public-private partnership. So I work for USDA. I cannot sign you up for a crop insurance policy. Bailey cannot sign you up for a crop insurance policy. We're a public-private partnership. So we contract with private insurance companies. Our jargon form is AIPs. If I start saying AIP, I apologize. It's one of those things that is just grounded in my head after a career working here. But these companies sell and service the policies on our behalf. And so you have to contact a crop insurance agent for a quote. And if you want to find a crop insurance agent close to you, there's several, and quite a few in New England. We have a website. I have the link at the end of this presentation for finding one close to you. So what is federal crop insurance? So we're a government developed and supported insurance policy. So our program has been around for quite a while now. I think it started in 1939. We and the Soil Conservation Service, now NRCS, were originated in response to the Dust Bowl. So I think our first thing that we covered was wheat in Kansas. We develop and back crop insurance policies. So we develop a policy to cover different commodities, and then we back them. So, your insurance company is not going to go out of business. When you buy our policy, it's got the backing of the government that you will be paid. But these policies are not sold or serviced by the government. They're sold and serviced by private companies. So again, this is just something to keep in mind. We're similar to FSA. We're a sister agency, but we're slightly different. And I think sometimes this can lead to a lot of confusion because our rules are similar but different. Our programs are similar but different. And so keeping NAP and crop insurance straight is very challenging, even for us. And so I wanted to just give you an overview. Sometimes you'll hear something about NAP and it'll actually be our program. Sometimes you'll hear something about our program, it'll actually be NAP. So looking at the overall crop insurance program in New England, we've got sort of two general tracks. We've got yield-based programs. Our acronym is APH, similar to what Bailey was talking about with NAP. We look at your historical production for a given crop. So we cover corn, we cover, for field corn and silage, we cover tobacco, cover apples, we cover peaches. In some counties, we cover grapes. In some parts of the New England area, we cover blueberries, in coastal Maine, cover potatoes in different counties. Availability for these programs vary by crop and county. We're always looking for feedback on where we should be expanding. Sometimes in New England, it can be difficult to have a lot of data in a given county and sort of look at the crop reports that FSA gets and say, oh yeah, that's a no-brainer. We need to make sure that we add this program to this county. So if there's interest in adding a specific crop yield-based program into an area, we would really like to accomplish it. We've worked really hard to add fresh market tomatoes, which we know are a popular program or a popular crop to grow. We've added a program to the Connecticut River area in Connecticut. So I think it used to be in Hartford County. Now they've changed the counties to COGS, some kind of new acronym, but I think it's now in the Capital District. But anyway, if there's other places we should add the tomato program, we'd love to do it. If there's other crops we should be adding, we'd love to do it. We in the regional office have the ability to expand your crops. Then we also have revenue-based programs, and that's what I'm going to give an overview of here. And so there's two of them, whole farm revenue protection and micro farm. They're available in every county. They cover every crop. And we're also continuing to look for feedback on these programs. The thinking behind these programs, I think, is on the next slide. Yeah. So we hear a lot from New England farmers and other stakeholders. Well, your crop insurance is for the Midwest. What you guys do out there doesn't really work for us. I'm really diverse. I grow a lot of different things. I'm not doing commodity crops. I'm doing vegetables. Your program, we need something that fits us. And so the idea behind both of these programs is it is supposed to better fit you guys than the APH programs. Now, whether or not that's true in practice, it probably at this point it is something we need to continue to work on. But Whole Farm came out in 2015. Microfarm was released in 2022. Both of these were Farm Bill initiatives, so Congress instructed us to put these programs together. And basically, instead of it ensuring an individual commodity on your farm, what we look at is your historical gross revenue. So we look at, if you fill out Schedule F, we look at your historical gross revenue on the Schedule F. And so Whole Farm will insure up to $17 million in gross revenue. So a fairly large farm can qualify for it. Microfarm is available for farms that are up to $350,000 in approved revenue. And Microfarm was created after Whole Farm. The idea is it has simpler record keeping requirements, and it was actually a local foods producer initiative in the 2018 Farm Bill. We were instructed to try to come up with a program that would be more appealing to local foods producers who have a lot of challenges with record keeping, and we're struggling to qualify for Whole Farm. So these programs run side by side. They're available again in every county for every crop. And so backing off a little bit from what we offer, I kind of wanted to give you guys this is a similar to what Bailey presented, but just a sort of an easy visual representation of how crop insurance works, no matter what you pick. And I think this is also pretty much how NAP works. But it starts out, you apply for a policy. Then policy is accepted and insurance attaches. At some point, you have to report your acreage. So you fill out during the season, you have to fill out a report. And once that acreage report is conducted, you get a summary of coverage. Based on the summary of coverage, you get your bill. And then at some point, if you have damage like you would have had last year, or that you did have last year and you would have with this policy, you file a notice of loss to your crop insurance agent, and there will be an inspection and then an indemnity claim if there's enough damage to cause an indemnity. And then on the back end, we have this little red arrow, number 11, and that's our program changes. So every year we update this policy, or all of our policies, based on feedback that we get from growers, that we get from Congress, that we get from the insurance industry, that we get from farm groups. And so we're constantly working to improve things. And so every year we have a contract change date. In the case of Whole Farm and Micro, it's the end of August. And by August 30th, we've got to provide our updates for the next year. So if there's anything that we could do for next year to make this a more accessible program, we can take feedback now. We're glad to meet with growers, glad to meet with Extension, glad to meet with anybody that's got some ideas. And then we can try and work on some program changes that would then be available for next crop year. So like Sue said, it's a living process. It's not so regimented at this point. We have a lot of ability to change things and explore new ideas. So for you as a grower, if you're interested in whole farm or micro farm, your application would be on March 15th for whole farm, April 15th for micro farm. You would get with the crop insurance agent and you would fill out an application. And for an application to be accepted in the first year, you've got quite a few required forms. And I'll get into this in more depth when we talk on Thursday. But I wanted to give a quick overview of this to try to maybe demystify this a little bit and make it straightforward. You know, these are the things that you would have to do in order to qualify. So you would need to provide your farm tax records. For whole farm, you would need 5 years of tax records. For micro farm, you need 3 years of tax records. If you have a perennial crop, peaches, apples, blueberries, you would need the orchard to be inspected by the insurance company that was working with your policy, so they make sure it was in working order and it was being maintained properly. And then you would also have to complete 3 forms. Actually, it's more than 3, but you have to complete 3 general forms. You'd have an allowable revenue worksheet, which you would do one of those for each tax year in your history, either 5 for whole farm or 3 for micro. And what that is you take your Schedule F, and the allowable revenue worksheet shows you which boxes on the Schedule F would be considered allowable revenue under our policy. So we cover generally any animals or commodities that you grow and sell, and any animals and commodities that you buy and resell. So those are things that we cover. There are some things we don't cover. For example, we don't cover timber. We don't cover animals that are grown to be pets. There's a couple of exclusions. And so this allowable revenue worksheet helps you work through that to come from your Schedule F revenue to what your insurable revenue would be.
Can
So
I
once
jump
you
in and
complete
ask
that,
a quick question? Sorry to interrupt you.
yes.
What if you have like other types of activities on your farm, ag tourism, dinners, festivals, educational programs? How do you separate that out, or do you have to? Does that count as revenue?
Yeah. I think that wouldn't count as revenue. So if you had for example, I think the example we use in our policy is bottled water. If you sell bottled water as part of your agritourism, that's not something that we cover. So that would be something that would, could be impacted by weather, but really we're covering the value of the commodity. So if you have people come to your orchard to pick blueberries and you sell them bottled water while they're there, we cover the blueberries, but we don't necessarily cover the bottled water. And then how you figure out what's the value of the blueberries if you charge admission on top of charging a fee for your, that there's a lot of, again, in the weeds that we could get into as we sort of go through the forms. And we'll try to accomplish that a little bit better on Thursday.
Okay, thanks.
Sure. So the allowable revenue worksheet shows you what's an insurable revenue and what's not. And that's taken from your Schedule F. And so we have and again on Thursday, I'll show a copy of our template form. And then you have a whole farm history report, which is basically where you take the 5 years of those worksheets and you put the bottom line numbers in together, and it's on one form. And so the whole farm history report shows, what your historical bottom line insurable revenue is over the last 5 or 3 years, depending. And all this stuff, you have a crop insurance agent that will help you fill it out. It's not anything you're expected to do by yourself on your farm. It's something that your agent will go through with you. I'm not going to say it's no work. So I've talked to the agents and they say that it, depending on the records and the operation they're dealing with, it can be quite a bit of work. So we, again, trying to paint an accurate picture, but that's what those first 2 forms are. And then the last form is your intended farm operation report. In this form, you basically put a list of all of the intended commodities that you plan to plant during the year. So if you want to put 5 or 6 things out, you're going to do pumpkins and winter squash and strawberries and 2 or 3 other things, you would list them all. You would list your expected acreage that you plan to plant, your expected yield based on your historical yields, and your expected revenue based on your historical prices. And so you put this all onto your intended farm operation report. And all these forms may need to be supported by records. So you can't, if you don't have records, this can become a difficult policy to access. So sort of to echo what Bailey said, at this point, record keeping is a really important part of being able to access the farm safety net. So for whole farm, you've got to have disinterested third-party verifiable documentation or direct marketing sales records. So if you've got it, so if you sell your stuff to a grocery store, you sell your commodities to a local farm market, you would have whatever receipts from them. If you run your own farm market, which I know is common in, or your own farm stand, which I know is very common in New England, then we would be able to take the records from that. We would call those direct marketing sales records. And we could do our own 3 hours about this. This is there's a fairly involved thing to get into, but we'll talk about this in more depth and sort of what RMA considers a sales record on Thursday. And then microfarm, we understand that for local foods producers, they don't always have those direct disinterested third-party documentation or the direct marketing sales records. So we allow them to have what we call a consolidated sales record, which we think is a more simple approach. This is, again, something where I think that the discussion between RMA and farmers who are potentially interested in this is really valuable, because we know our program, but we don't we don't grow or market agricultural commodities for a living. And so having some reality checks about what we're requiring, what's reasonable, what records you guys are actually keeping, what industry standards for record keeping are always very helpful for us. I know they take a lot of time from you guys, and you're also running businesses. So we don't ask lightly for this. It is very helpful for us as we work on our policies to understand, how does marketing really work in your part of the world?
Quick question on that.
Yes, ma'am.
What about like QuickBooks files? Would those suffice for records or?
Potentially. So so we basically have what needs to be on a record for it to be acceptable. And we'll get into that on Thursday. Again, it would sidetrack this a little bit. But if the QuickBooks records had that, then I believe that'd be fine. If they don't, then we'd have to have something that would augment it to make it acceptable record. So like Bailey mentioned on the NAP, there's an acreage report that's due. For whole farm, there's not really an acreage report. We just require a revised farm operation report. So it's that same intended operation report. You do the same form, but you just make any revisions. So if you decided, well, actually, we didn't put as many pumpkins out this year as we were planning on, but we wanted to do something else, you can note that on that revised farm operation report. And that's typically due July 15th. So that would be due at the same time as a normal acreage report for the NAP program or for some of the other crop insurance. After that form comes in, you will get a premium bill. The billing date is August 15th. Usually, I think the bills go out a couple weeks after that, typically in September. And we get a lot of questions about how much the program costs. And it's a very hard thing to give a straight answer to, because it really depends on the operation. So we have varying rates and subsidies depending on the commodity you grow, the coverage level you pick. Generally speaking, as your operation becomes more diverse, the cost to a producer should decrease. As your operation becomes less diverse, it becomes more expensive. There's an RMA cost estimator on the website. I have a link to it here. Really, it's probably best to work on this with an agent, because it's got a lot of questions that you have to answer, and it can be a little jargony. If you want to go through it without an agent, one of my staff would love to get on the phone with you and help you with it if you need help. But it's a good way to explore what it costs. I did a sample quote. So this was just, I made this farm up. This isn't based on reality at all. But I decided to I made up a farm in York County, Maine. The farmer wants a micro farm policy. They have $290,000 in revenue that they want to insure. And this quote shows after subsidy what this would cost them. And so you can see for 85% coverage level, which means a 15% deductible, the insurance kicks in after you lose 15% of the crop at 100% of the value. Our insurance on whole farm doesn't have that value limit that Bailey was talking about. We cover. So for 85% coverage, so what we think of as a very low deductible, it would cost about $13,000. For a lower level of coverage, you can see it becomes a lot less expensive quickly. So for 65% coverage, it's $3,700. And when you look at our quotes, you'll see a total premium amount. That's the amount that basically the value of the policy, what the policy should cost. It's subsidized. So then some of that portion is covered by the government. So on any quote where you see the producer premium amount, that's the cost to you. The total premium amount is interesting to the insurance company and the government, but it's not necessarily relevant to you as a grower. The producer premium amount is the amount that you would be charged to have the policy. And so I guess it sort of depends on farm profitability and what you're looking at, if these are affordable premiums or not. But I wanted to give a sort of a general picture, because that was some of the feedback we had heard of, why do people not participate in this? They said, well, it's not worth it. So this is just to give you guys an idea of what something might cost for I would say not a very big farm, but that's what the premium would be. And then, as Bailey said, if you have a claim, so for example, last summer, if you had just vegetables, if you didn't have fruit, you would have made a claim already, in February. But if you had vegetables, if you were a diversified vegetable grower, when it started raining in July, within 72 hours of the loss or damage, you would let your insurance agent know, and then they would take it from there. The only thing you'd be responsible for doing is continuing to care for the crop and following the insurance company's instructions. But at the end of the year, you would be required to submit a final farm operation report. And this would be sort of like your revised farm operation report. You look at your original plan, look at your revised plan, you look at your final plan. What did you end up planting? What did you end up harvesting? What was the value of it? And then this, combined with your Schedule F tax return for the year of the disaster, is the basis on which your claim will be settled. So with that, we got like I said, program is sold and serviced by private agents. Just want to emphasize that again. That's we can't get us at the service center. We can't recommend one agent over another. That's since they're all government contractors, it's against our ethical rule for me to say, oh yeah, so and so's great or so and so's a bum. It's sort of up to you. I do always encourage people that are interested in crop insurance to find a neighbor, somebody in their community that's had insurance, and see if they like their agent. That's much better than going to a locator tool. But we do have a locator tool on our website. You go to rma.usda.gov, it actually says find an agent at the very top. You just click on that. And then, because we're not the best web design, there's another button you click again that says find an agent. So you have to click it twice. But when you find an agent, you can type in your zip code or your address or your state or anything. And you can also include in that, if you need somebody that's fluent in a language other than English, there's a list of boxes for that. If you need somebody who's got a specialty in livestock, there's a box for that. So there are, I think we're working on getting a box together so you can find someone who considers themselves a whole farm expert. And I think there'll be a certification process for that as well. And so with that, that is my high level overview. We'll get into the weeds on these forms a little bit more on Thursday. And if you've got any questions, that's our phone number and that's our email address.
Great. Thanks so much, Alex. So hopefully that answered some of your questions. I see there are still a couple of unanswered questions in the Q&A. A couple of people wondering, Alex, if you could buy, say, microfarm and NAP or another insurance program.
Yes, you can. So you can have, for example, if you had tomatoes and you were in Connecticut River area of I guess Capital District now, you could buy our tomato policy and you could buy a whole farm and microfarm policy over that. With NAP, it's a little bit more complicated, but you can buy them both. I think Bailey or Julie might be able to make sure. I might have to look this up to be sure. I believe you can get a NAP payment and a whole farm payment. I think that's unusual, but I believe it does work that way, that you would just then consider the NAP to be part of your revenue for that year. So if you had a NAP policy and it paid you $50,000, then you wouldn't be able to be paid twice. Am I right on that, Bailey?
I would have to look into that myself too, Alex. I will talk to Julie about that and hopefully she will be able to give an answer to everyone on Thursday.
Okay, so we'll bookmark that one for next time. A couple different questions around the value of the crop, like how it's determined how much you would get paid back. I think Julie might have
Oh,
answered that a little bit. As far as maybe going to your local office and they might have different pricing options, whether you're organic or conventional or direct market or wholesale. But on the whole farm and the micro farm, the revenue-based plans, there's no like crop pricing because it's just your farm revenue, right?
Correct. The crop pricing is based on your individual historical pricing. So we would look at your records and I think there's a sort of a list of things we can look at to establish a price. But the first thing we would use would be your records. So if you're historically selling your strawberries for $4.50 a pound, we would use that as your, and I think we'd take a 3-year average. So we look at the last 3 years. If you historically sell at $4.50 a pound, that would be what we would be able to insure it at going forward. So that's how it's set up. It's all based on your operation. The idea behind it, and again, open to feedback on it, is that diverse farms also are very diverse marketers. So we don't want to be too prescriptive in the price we assign. If we do, we're going to undervalue some people and overvalue other people. We want to let you guys, use your own marketing in order for us to set your crop insurance guarantee with these programs.
Okay. What about how would farmers get a sense of the premium and the cost before going through the application process?
That estimator link that I shared a couple slides ago.
Yeah, I put it in the chat.
That link, and like I said, it can be a little bit challenging to run. Just call or email us. I think probably emailing would be the best, and we could set up an appointment with one of our specialists. I mean, we've gone through this several times, in New York and other places where we've just, either set up a Teams or a Zoom and shared screens or got on the phone, said, this is how you click these buttons. So we will be glad to do that with you if anybody wants that.
And then another option, I guess, is to find an agent near you and ask for a quote.
Yeah, that would also be, I guess if they didn't want to do that, they could call us. But yeah, find an agent near you and they'll be able to quote you also.
And on the FSA side, you could go to your county office and work with an agent there before you start applying to get some of your questions answered and
yes, absolutely. You can go to the county office and we can look at what the different levels, we can print out the form and look at what the different levels of premiums would be for you and all of that. So that is an available service at your county office.
Okay. Well, we're just about out of time. On the poll, a few people said the barrier to getting crop insurance in the past was something else. I'm curious to hear from folks. If you want to share, you can raise your hand or put in the chat what other barriers you've found in getting crop insurance, other than maybe being confused about what the options were or feeling overwhelmed by all the paperwork. And that's something you could also put in the survey at the end. I think we'll end it there for today. And thanks so much to the two presenters and for all of you for attending. We did record this meeting, so it'll be up online at some point soon. And hope to see some of you on Thursday when we'll dig a little bit deeper for those of you who are interested in pursuing this. So thanks.